Good morning, this Monday, the 3rd of February. I'm Grady Wolf, market analyst with Bell Direct. Wall Street had a negative end to the last trading week after President Donald Trump announced aggressive tariffs against major US trading partners would begin this week, and the announcement was on Saturday. The Dow Jones fell 0.75%, the S&P 500 lost 0.5%, and the tech-heavy Nasdaq ended the day down 0.28%. Stocks with exposure to the key trading partner areas like Mexico, Canada and China posted greater losses on Friday, including Mexican food outlet company Chipotle and Corona brewer Constellation Brands. Over the weekend, President Trump introduced 25% tariffs on Canadian and Mexican imports into the US and an additional 10% tariff on Chinese goods, which led Canada to retaliate with a 25% tariff on US goods heading into Canada. In Europe on Friday, markets rose to end the week higher following the release of strong earnings results in the region. The STOXX 600 rose 0.13%, Germany's DAX gained 0.02%. The French CAC added 0.11%, and in the UK, the FTSE 100 ended the day up 0.31%. Across the APAC region on Friday, markets mostly rose following strength on Wall Street on Thursday. Japan's Nikkei added 0.15%, South Korea's Kospi index fell 0.77%, and India's Nifty 50 added 1.18%, while China's CSI and Hong Kong's Hang Seng indexes were both closed for the Lunar New Year holiday. Locally, to end the week last week, the ASX 200 posted a 0.45% gain on Friday and 1.83% rise for the trading week, as a rally late in the week for mining stocks finished off a strong week on the local market. Rate-sensitive sectors like tech, REIT and consumer discretionary stocks also had a really strong week last week after inflation data in Australia came in below economists' expectations and paved the way for the RBA to seriously consider a rate cut in 2 weeks' time. Simmons Group shares had a stellar day on Friday with a rise of 27% after the leading Australian home building company agreed to pay $10 million for the acquisition of Melbourne-based Dennis Family Homes to increase its new construction builds by 25% next financial year. PointsBet, on the other hand, tumbled over 13% on the release of the company's quarterly trading update, including flat growth in quarterly total net win and negative normalised EBITDA of $3.3 million for the first half. Ahead of the first trading session of the new trading week, the SPY futures are anticipating the ASX will open the day down 1.19%, likely due to investor reactions to Trump's tariffs announced over the weekend. On the commodities front this morning, oil was trading 0.3% lower at $72.53 a barrel. Gold is up just 0.04% at $2,797 an ounce, and iron ore is up 0.26% at $101.59 a tonne. The Australian dollar has further weakened against the greenback to buy 62.15 US cents, 95.37 Japanese yen, 50.12 British pence, and 1 New Zealand dollar and 10 cents. On the reporting season calendar today, Argo Investments will be releasing their results. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the rating on Strike Energy from a speculative buy rating to a speculative hold rating and have a 12-month price target on the company of 27 cents per share on the gas producer, following the release of a second quarter trading update outlining production and revenue lower than Bell Potter expected due to maintenance impacting output. And Trading Central has identified a bullish signal on New Farm following the formation of a pattern over a period of 11 days, which is roughly the same amount of time that share price may rise from the close of $3.65 to the range of $3.86 to $3.92, according to standard principles of technical analysis. And that's all for this Monday morning. Have a wonderful day, a great week, and happy investing.